Good morning, everybody. How are we doing? Who do we have in the chat today? Say hello if you're here. We shall begin shortly. Good morning, Daxtrius. Good morning, Jshroom. Good morning, Jez. Good morning, Nuno. Good morning, TN. TN, are you saying Nuno comes from a naughty channel that people shouldn't go to because stealing other people's content? Naughty. Good morning, Andy. Good morning, Krusty. Good morning, JP. Good morning, Fasa, AZTV, Alexander, Heimo. Welcome. Having my nice morning coffee. No way, never paid for nothing like that. I'm pretty sure a lot of our content's on that leaks page, right? I think they include or they used to include us within it. So if anyone wants to get our shit for free, then you know where to go. But don't do that because it's bad. Anyway. Yeah. I don't care if people want to get the content for $30 a month and not support the content creator, then that's on them. Anyways, we shall get into the charts a little bit. So I was yesterday, right? We had a little bit of a dip. I was in a short position. I then closed most of that short position. Just held a little bit more as a hedge. But I'm feeling slightly, cautiously optimistic about the markets in their current state. So there's a lot of the thing is, I think the bear argument seems to be the popular argument right now, and I'm seeing a lot of channels, a lot of people sharing ideas, and yes, there's data that's slightly concerning. Of course, we know that America in itself is kind of fucked. We know that they're struggling to tackle inflation. We know that there has been a small uptick in unemployment claims. We know all of this stuff, but this has been going on for years, and it's not resulted in anything catastrophic to this date. And I think generally just because markets are a little bit slow, and because we've seen a correction recently, there's been a lot of talk about this going on. And my default is just to question everything that I see. If you're watching someone on like YouTube or anything like that, including myself, just question everything. Go and look for the data yourself and see what you can find. So I was doing a little bit of research yesterday, just because I was seeing bear posts everywhere, and just like because there was one little dip after like 2 weeks of up only on the legacy markets. And I mentioned this in the chat yesterday, right? So essentially, in my opinion, where I believe the market is at right now, the S&P 500 has basically hit its final boss before a new all-time high, which is a little gap on the daily, and the day that we broke the uptrend that we had been in since April. Okay, you can see here that the market structure was up, and then you broke down on high volume. On the 18th, immediately what seemed to happen after we got this correction was everyone was like becoming and it was like seeing it on Twitter and stuff, and talking about, I think there's some talk about the Jay Powell speech again today and how bad things are again in general. And I was just like, I don't know. I just like saw that it took the highs and naturally got a bit of a dump from that. So we'll stick with the technicals because I don't really know anything about the macroeconomics anyway. But I did do a little bit of research myself just to see what was going on and look at some previous cycles. What has happened recently with rate cuts? That was another big thing, is that because we all know that the rate cuts are very likely to happen next month, and we're coming in towards the end of this month, so things are being priced in anticipation for that. So I wanted to see, like, okay, what was the historical outcome of previous rate cuts similar to what we're going to be seeing in September, if they do so happen in September. So there's only really been a couple of instances where that has happened. The only time that rates have been cut previously within recent history has either been mid-cycle adjustments, which is what they're labeling this as. It's an adjustment. It's not an emergency rate cut or anything like that. Or they've been emergency rate cuts in response to major economic turmoil, basically. So COVID crash, dot-com bubble, the 2008 financial crisis, these kind of things. And there was also some other stuff. So I did a little chart here, and I posted this onto Twitter. And the only time we've seen a mid-cycle adjustment, which is what they're saying that this is, recently, was back in 1995. And I just noticed a bit of a pattern that was emerging here. This is just something that I was like, oh, look, I see some things. I see some similarities in the chart. It's by no means a sure thing, but I see some similarities in the chart. So obviously the 1970s, there was this big depression, right? There was this big depression that went on. We then had a markup in prices as price came out of that. There was a black swan event in 1987. I don't know what that was. Housing, Cold War, something, maybe, who knows. I don't know what that was. Followed by another markup. And then we had the mid-cycle adjustment after this just steady increase in price after the black swan. I mean, it wasn't a steady increase. It was quite a big move up. But then you got that bubble that happened afterwards that took us all the way up into the dot-com bubble. And this has been kind of the cycle that I've been watching recently. Like, I believe, just from what I see on the charts, mainly at the moment, that we still have a bubble that needs to happen before things start to crash. Right? I don't see the market being as much of a bubble as it really needs to be at this stage. So then what happened after that? We went into another depression. Okay, the early 2000s were just marked by dot-com bubble and then 2008 financial crisis. What happens after that? You have the recovery. I should probably label this as like recovery rather than markup, because that's more what it is. Recovery. And this one, recovery. Recovery. Then once again, you had this black swan event, in this instance, the COVID crash. And then we have another markup after the COVID crash. So you have the recovery out of the depression recession. You then get the black swan events. You then have the markup, which is where there's a lot of still lingering fear within the market. And then you get these mid-cycle adjustments that lead to a bubble. So this is the time that it's happened previously. You have to go all the way back to like the 1950s for the last time that there was a mid-cycle adjustment. There have been rate cuts in between those, but like I say, these were when we had things like the COVID crash, when we had things like the housing crisis, when we had things like the dot-com bubble. There were rate cuts that were created in order to stimulate the recovery and to stimulate growth. So I'm just looking at this. I was drawing this up. And another thing I'm looking at the moment is just the money supply, global money supply, which is at all-time highs and increasing. steadily. So it had been at this resistance for the last few years. All right, this is the global money supply, and there's also the M2 money index, which is something else I've been looking at, which is this image. If I just load it up onto the screen right here, which just shows the global liquidity. Okay, starting to tick up. So what this essentially means is that there's a lot of money waiting on the sidelines that is ready to go into the markets based off of this typical 4-year cycle. I don't believe too much about it, but there is a tick up in the money that's waiting in order to get into markets. And that is starting to flow into the market with this increase in supply that's coming in. Okay, so this is just new money. So this blue line is new money coming into the market. All right, and generally speaking, when you get a break like this, it does lead to a large rally, and you would very much expect the global liquidity to continue to increase once it's on this kind of trajectory. And what this would then lead to is, and what I'm still expecting to happen over the course of the next year or so, is a new IPO boom. We haven't had any companies apart from Reddit doing IPOs for the last 4 years. There are literally thousands of companies that have raised the money already. Okay, they have raised the capital, and all of that money, this is white, this shouldn't be white, but this is the liquidity that needs to then get injected into the market. Oh my god, I drew something. So yeah, all of this, they raised the money a few years ago. Now this money needs to get injected into the market in order to have that IPO boom, in order for new companies to start to go public, in order to get a new generation of stocks, basically, because we don't have any at the moment. We're just trading old shit. And this whole stock market rally has just been based on old stuff rallying. Nvidia rallying, Apple rallying, Tesla, not yet, Microsoft rallying, so on and so on. And if you look back to where we were in like 2020, 2021, we had all these new companies that did their IPOs, the likes of Airbnb, Uber, Spotify, all of these companies doing their IPOs, and we're very likely to see another situation where that starts to happen again over the course of the next year. So that's why I still remain bullish. Now, I know there is a lot of talk about unemployment as well. So I had a little look this morning at unemployment data, and I was looking at, okay, where is this data at? Like, what is the actual data? Because people are saying, right, we know that there was this big, like, mid-cycle, there was this big adjustment, big correction on the unemployment data. So I wanted to see what that actually looked like in the long term. And this is our current unemployment here. So yes, it's ticking up slightly. All right, it's ticking up slightly, which is what's causing a lot of panic in the market. But it's still at the lowest point it's like ever been, basically. So unemployment in the US is still more or less, unless you look at the mid-90s, at the lowest point that it's ever been. And I think a lot of this adjustment was based on the Hurricane Beryl or whatever it was. So that's obviously seen a big tick up over the last couple of months because there has been temporary unemployment based off of that. There's also companies that are cutting costs and struggling, and the data, of course, lags behind a little bit. But again, in my opinion, the cost cutting is based off of things that have happened previously and is an ongoing thing, and the liquidity that's coming into the market is the thing that's going to still drive the market higher. So there's different opinions out there at the moment. I'm sticking to this one, and I'm even questioning this one. Like, I question this within my own streams. Like, been looking at Bitcoin, and I question whether we are going to come back, whether this cycle is going to be different to previous times. But then I just look at what's happened previously, and I still see the similarities there. So those similarities are certainly there. And I really don't think, looking around at the world, that it's like that doom and gloom at the moment is to be justified in the way that it would affect your own investment and your own trading decisions. I think it's worth at the moment still having that risk. Now, I do believe strongly that all of this stuff, all of this bearish stuff will come to a tipping point, but I think there's room left for it to go. Okay, the data needs to get a lot worse before we can see a correction. At the moment, it's not bad. From what I've been looking at, it just isn't. And I don't think that cuts are going to create the big crash that people are expecting, because the big crashes that people are expecting have come from events that had already been a bubble, and I just don't believe we're quite there yet. Not until we see the new liquidity coming in. Once that happens, okay, of course, I think we do go into another potentially decade-long depression, and that could be as soon as next year. All right, so that's just a little bit of a thesis, a little bit of fun. It's fun to debate this kind of stuff. Like I say, my default is just, if I see information and I see stuff that's being said by people, my default will be like, that's bullshit. I'm gonna try and look at it myself and find almost the counter argument. So yeah, maybe I'm just being what's the word for it? Being like an idiot and like just saying, I want to find the counter argument for all these bears and give a bullish case. But this is still what I believe. So this goes back into something that I've been talking about in previous videos about how I think when we do get the cuts, there will be a small correction when that happens. But then I think we're going to see that the dollar continues to see weakness, and then the markets rally into a bubble soon after that. So I just wanted to touch upon that because that's been on my mind a little bit the last couple of days, because the market's been slow. And I still do think, don't panic, don't fear, because I think if you do that now and you exit the market now, based off of a lot of uncertainty that's going around, you could miss what is likely going to be the only time potentially in this phase of your life. So if you're young, you'll be old by the next time we bubble up like this, right? Okay, it hasn't happened since the 90s. This is 30 years ago. So I do believe that we're looking at another kind of bubble event that's going to lead into a big depression, and when that depression happens, you want to be out of the market then. So just don't really want to miss that last opportunity. Anyway, we're going to go into the Bitcoin analysis because that is why people are more here. Lucifer, this is great, Luke. So entry, exit, and stop loss. Yeah, entry, 100x long, everything. No, I'm looking forward to a new, when it comes to the stock market, new IPOs. I think they're going to be very lucrative soon. What the fuck is this music in the background? Listen to this. I tried a different playlist today and this is ridiculous. If the music's pissing anyone off, please tell me, because that is crazy. It's very much distracting me. Oh, it's changed. Music's changed. Speedy. It was speedy. Right. Yeah, crackdown. BTC price analysis, please. Yes. The biggest risk is JP saying the same shite he's been saying for months and under delivering expectations. Also, this event is a multi-day event, so expect a comment to be made during closes. Yeah. We'll see what happens. Again, like I say, we can only control what we can control. We can't control what the economy does. So we just simply look at the charts. And yesterday, because the charts hit a gap, I personally believe that's why we dipped, and not because of any data. But yeah. Anyway, getting back into it. I'm gonna get music off, and we're gonna do the We won't have dead stablecoin weekends on BTC. Yes. AI took control of my playlist. It did. It's just making it go crazy. Right. Man, I'm too distracted. I'm too distracted because I don't really care about the market at the moment. So it's kind of boring to talk about it. Music off. We'll do a little recording. Hey, and good morning, traders. Welcome to today's video, Friday the 23rd of August, 2024. And yeah, Bitcoin update for you, where it's still pretty slow, but I have been getting a little bit of a bullish tingling. Yesterday, as we had this move down, I was bidding into it and starting to risk up a little bit more so than I have done recently, just in almost anticipation. I'm not expecting any crazy fireworks, but I do think that we could be seeing the day today or over the next few days, depending on, of course, there's some big data coming out later again that could ruin this. But a move up back towards that monthly open, towards that 64K level, which is something I've been eyeing up for quite some time. So if any of you guys have been following, you'll know that I did buy again the dip that I didn't really think was going to happen previously, but that I added onto that when we did have that drop to 56K. And I've just been gradually adding a little bit of size. And yesterday was another day where I added a bit of size onto this trade. Now, when you look at this, okay, it does appear that we had this recovery, a little bit of a bull flag, and we can be looking for another markup in price here. There are some certain things within like the narrative and everything that I've been looking at. I've been looking at some just the timing of this move and when we can expect this to happen. And it seems that the timing of it is kind of there as well. And what we've also done, if we zoom in slightly onto this chart, we have essentially done everything that needs to be done in regards to correcting any impulsive moves. Okay, within this range that we're currently in, as you can see, we had impulse up, got corrected, impulse up, got corrected, impulse down, corrected, impulse up, corrected, impulse up, corrected, impulse up, corrected. Every single move within this range has been corrected, and it's left behind 0 imbalances on the chart. So we are ready to move away from this range now. And that leads us to one of two things. Price either move goes up or it goes down. And I'm positioned a little bit more so for a move up right now. Now, that doesn't mean that I'm looking at this as being uber bullish, but there are things that have happened within previous times when the market was similar, and there will be things that I am looking for over the next few days if, first of all, we are to get the move up, and then the reaction that we see from that point. I don't like this being red anymore, and I don't like that there's an arrow on here. So yeah, if we are going to get this move up, there are a few things that I want to see. First of all, if we do get the move up, get this and see a rejection around this order block that we have back at 64K and around the monthly open. So that's the first thing. If we do see a rejection from that, how big is the rejection going to be? Is it going to hold above this previous range and just consolidate there over the weekend before we can be looking once again for higher prices? Or are we going to see another situation where it just goes up and comes all the way back down again? Right now, my probably initial reaction to this, if we are to get the move up, will probably be to look to fade it, but fairly cautiously, because what we have seen, okay, recently is every single move that has gone up has been retraced in full. Now, that means that we need to impulse up there to begin with. If we do have a slow, grindy move up that just does this over maybe the course of the next week or so, then I do believe that we can see that impulse that takes things higher. So it really depends on how we get there, if we get there, and the reaction that we get at that stage. So my initial reaction will be to probably look to fade that back down to wherever the origin of that impulsive move is. As you can see, every time that we have had this, it has gone back to the beginning of that move, but it's made another higher low. And we're consistently putting in those higher lows and higher highs locally and just clawing our way back up. This is something that I speak about very often. It is the gradual movement away from value that traders and investors don't necessarily notice and don't necessarily participate in, but it brings acceptance of higher price gradually to make it easier for there to be a push eventually afterwards. And what it also does is it just traps short positions in areas where short positions don't necessarily want to be, but without really giving them any kind of threat. Because if you're short from within this range, the chances are you're not particularly concerned about it at this stage. Even if you're short from down here, there will still be a lot of people holding that, and that's where you can start to get the short squeeze that happens afterwards, right? This is a little bit just all over the place, just brain farts, noises, stuff at the moment. But that is, yeah, the kind of thing that I'm looking at. Now, for the technicals, what do we have here? So we have had another similar situation, okay? It was a little bit of a drop yesterday. So the short I had was actually here. It was on Wednesday, right? Where we had the move up that took out previous highs, okay, from back over here. Okay, we had that short, and then what we did, we put in this little range, swept the highs, then I went short. I managed to get a take profit off of this, not at that low because this happened overnight. Okay, but I did manage to take profit on this after we had a bit of the bounce yesterday morning, and then again yesterday evening, starting to add in a little bit more size onto the long positions, which I'm still holding. And we do seem to have this just general TWAPy slow move up that is just gradually moving price up towards the highs of the range without it really being traded or being noticed by anyone, essentially. Now, we're seeing a little bit of a drop this morning, but again, I think that's nothing too significant that we can be looking at. Let's just add on a couple of things here. We haven't taken out the Asia highs in the London session, so that's a bit strange. We do have some imbalance below that could still be filled. The move from daily open is something that I would be looking at. We have had situations like this previously where we've had this movement straight up after daily open. We have had this drive on daily open, which is probably, yeah, there or thereabouts holding the VWAP. So the VWAP, as we're in a bit of a trending day today, is something that we want to be looking at. And if we are to lose the VWAP, I'd say probably looking at another test of that daily open to see if that can hold and just continue this chop, but another higher low being put in. Anything else that we have to say? I'm struggling a bit with what to talk about. That high should be over here, but we did still take it, so it doesn't really matter. Yeah, just a bit of a move up so far. The other nice thing that we've seen has been that we are seeing alts somewhat leading a little bit within this rally as well. If we look at Ethereum, the ETH BTC pair did get a decent move up overnight. And then some of the alts are starting to spark back into life. So maybe something that I'm going to look at throughout the rest of this stream is potentially look at altcoins and where there are opportunities for alts, because although we're seeing this slow grindy move up, there's just not really there's not really anyone participating in it at this stage. It's just a gradual kind of TWAPy effect higher up towards the top of the range, seeing if it can break through it with an impulse. I think altcoins would give a bit of a better risk to reward or better potential trades for anything. So we'll have a look at those in just a minute. But yeah, in regards to Bitcoin, there's not too much more to say. We are in the range. If we do drop down, then it would simply be a case like I had been looking at weekly open for a while because we never quite got there on Tuesday. We never back tested that on Tuesday. I'd also be looking at that anchored VWAP again, which is lines up with the daily level, and that's the anchored VWAP from the lows. And then I think also just looking to take any liquidity that is lower, but it becomes a bit tricky. I think if there is to be a move up, the level that we're looking at is relatively clear. We're looking up towards weekly open. We're looking up towards this gap, the single prints on the chart from back at the beginning of the month. And that would be the area that we could look for shorts. Now, if we do start to squeeze beyond that point, I think that's the time then to go risk on. Because if we do see a situation where we have, similar to what happened, and I do keep referring back to this, a situation where we break significantly through resistance like we did in the middle of October before this big rally, and it holds. Okay, so if we do get a squeeze that can break through resistance and hold, then that's the time for myself to go risk on and to then say, right, the market's ready to go. I still don't think that's going to happen until September. Later in September, early October, I still don't see that as being likely, but I do think that we can get that move towards that monthly open, see how the reaction goes from there, and then maybe just continue to play this boring range that has been going on forever. So it is a time for, like, if you're like myself, I'm in a long, I'm just remaining relatively patient on it whilst we see this grindy move up. If anything changes, it can happen very quickly. I'll quickly get out of those long positions and hedge myself back into a short position again. But as has been the plan for a while, there is room above for us to test into, and I do think the testing up into that room is looking like the slightly more likely scenario right now. Okay, there's not much more for me to say. Order flow, ignore it, because it's such low volume right now, and order flow is literally just exchanges moving the chart around. Yeah, it's not, there's very, very little in the way of actual human impact on the charts right now. So if you're like, oh my god, this guy's gone short $50 million at the lows, no, they haven't. It's just an exchange that's just done it there to fuck with people, probably. Yeah, and that's just what's happening. So I'm not going to look at the order flow, I'm not going to look at the ETFs. We're just going to take price action for what it is. There's some space above that can get traded into, and I'm going to keep it as simple as that. And unless we lose this little trend that we're in, then I am going to remain in that little bit of a bias. So yeah, I think I'm going to wrap it up. Of course, be aware there is a speech this afternoon, okay, 3 p.m. just after New York Open, all right? There is a lot of uncertainty in the market. It could go either way, right? We have had a big rally off of the lows from equities. That's happened already. There could be more of a correction to come with that. That could send Bitcoin back down towards the lows, but we'll just have to react. As and when that happens, we don't know what the reaction to this talk is going to be later. We don't know whether Jay Powell is going to come out dovish or neutral or whatever it's going to be. We also have retail. Oh no, that's Canadian retail sales. Ignore that. Yeah, so just be aware after New York Open today, there's likely to be some like weirdness going on. I can't tell you what it's going to be because it's not data led. It's just a talk and questions being answered by Powell. This is what it is. Just in case you guys need to know, this is what it is. Okay. This is the speech that we have today, which is Fed Chair Powell speaks due to speak about the economic outlook at the Jackson Hole Economic Policy Symposium in Wyoming. Okay, so usual effects says more hawkish than expected is good for currency. So if he's a little bit down and a bit like poo-poo on the markets, then that's going to be good for currency. Good for the DXY, which has been dropping lately. If he comes out a little bit dovish, like saying, yeah, the data's cool, we're okay here, we're still looking at those interest rate cuts as being something that there's good potential for, then I think we can see that the risk assets respond relatively well from that. But we'll have to wait and see. I don't know what's going to happen. I'm not going to pretend I know what's going to happen. So, yeah. Right. Yep, cool. I'm going to wrap it up there. Have a great day, everyone. We're going to continue on with the stream. Please hit the like and subscribe button if you are not subscribed already. And I'll see you in the next one. Cheers. Bye-bye. Ragdogs, Luke. Also, I interviewed the guy who wrote the Elliott Waves book, who thinks the 100-year stock charts shows that we are in the last wave of the fifth wave. Not sure if you trust Elliott Waves, but your thoughts would be great. I mean, yeah, I would agree. My view is that we should remain bullish for a little bit longer than a lot of the market expects it to be. But be aware that things aren't all like glitter and rainbows. And if there is to be another leg up, which I do think is going to happen, I do believe in the mid-cycle adjustment is going to cause a final extended fifth wave, if that's what you'd like to call it. I do believe that the Bitcoin and crypto cycle is going to continue on as it has done previously. I just believe things will be like they have been previously. That's as simple as that. There's nothing to suggest that anything's going to be different this time around. And we are in the middle of a bull cycle. The middle meaning that we're getting the mid-cycle adjustment, right? It's the middle of the cycle. And that's what we're seeing right now. And that is what my whole basis is about. It's happened before. It's probably going to happen again. We get the extended wave. And then you hold on to your hats and you pray, because things are going to get nasty after that. I do strongly believe things are going to get very bad. But not yet. We have time. Don't sell it all now, because if things get bad now, they're not going to get that bad, right? We're looking for extremes. You have to look for extremes within the market to base any decision. We have no extremes right now. Zero extremes. Nothing. There is nothing extreme going on anywhere. Anywhere. Yeah. And the market will not peak or bottom unless there are extremes. So unemployment climbing, it's not extreme, it's just a gradual trickle. We need to wait for it to become extreme. The market going up, it's not extreme, it's gradual. Bitcoin, crypto, certainly not extreme. You peak above the all-time high and you correct for a few months. What's going on in the world, like geopolitically, it's not extreme, okay? Yes, it's like stuff that causes some, like there's bad things that happen and there's good things that happen, but we're not seeing extremes on either side. So yeah, that's I think we need to wait for extremes. So I still wait for extremes, and then we position, because we're going, like, if we do get extremes, it's going to be an extreme bubble, and everyone's going to be talking about the stock market. Everyone's going to be talking about crypto. Everyone's going to be talking about AI. Everyone's going to be getting into all the new stocks that launch. Okay, I've shared this on my charts many, many times. There are thousands of companies, trillions of dollars invested already, waiting to go public. They're not going to do that when markets are chill. They're going to do that when there's some kind of extreme, when there's liquidity to sell into. Yeah. Yeah. Also, for this cycle, is your plan to be positioned in BTC before repositioning into alts? Or do you buy spot alts now in anticipation for the altcoin run? I've spoken about this again previously. I don't really hold very much at all of anything. Yeah, I trade. So what I'm looking for is volatility to kick in. So for myself, what I will look for is volatility to kick in and to trade it with more size. So I do hold some spot Bitcoin. I do hold some spot Ethereum. I do have a lot of stuff that's just generally like, I don't care what the market does. It's just there. But yeah, I'm not really particularly positioned right now into anything crazy. I will trade what I see, and when the volatility kicks in, I'll do that. I think what I would probably say, if I had what I'd look for initially, I think would be look for a break on Bitcoin, and then wait for the first dip after that break, and then position into alts after that. Because I think what we generally see quite often, and again, this is kind of speculation stuff, right? You get the break in Bitcoin, okay, let that play out, and then start to position in alts once you start to like range a bit more, and then play the alt game after that. I think, yeah, you can afford to miss the first move, because once we do get the first move, it's going to be the first of many. Okay, if and when that does happen. So yeah, I wouldn't be in anticipation. I do have some spot bags. I don't really know what I like right now. There's a few alt bags that I have. The likes of, like, already, I hold some Bitcoin, I hold some Ethereum, I hold some Doge, I hold some Layer 0, I hold some Aether. It's kind of it. And the altcoins aren't really performing very well for me at the moment, but I just hold some. But I'll trade it afterwards. Yeah. I hold some stocks. I hold some Tesla. And have a little bit of Nvidia left. Not much. Have some AI stocks. But yeah. Vaporware costing 65k sounds pretty extreme to me, though. Okay. I wouldn't know what alts to buy or position into. They all look absolute trash. Exactly that. Yeah, exactly that. They all do look trash. But we know with this market, it can flip like that. Yeah. And then everything will just spark back into life. And you just got to wait for it. I still think that won't happen. I don't think that will happen until like September, October. Yeah, I still think we're looking at a lot more sideways. There's no need to get positioned into altcoins now. Yeah. And you don't even really need to like look at what you might want to buy, because the market's going to tell you what's bullish when it starts moving, yeah? It's like the big narrative of the previous cycle. You don't need to like overthink it, right? It doesn't really need to be done. You look at October, wasn't it, when things kicked off, and it was like Solana that really sparked the bull market. This here is the day that the 16th of October, that's the day that our latest bull market began. Yeah, right there. You don't need to know what's good until it shows you it's good. And then you just start trading it off when you're like, oh, this is good. This is outperforming the market. So when you start to see stuff, you just see what's outperforming and don't fade it. It's pretty left curve the shit out of it. Look at what's good, buy it. But wait until things are showing you that they're good, first of all, because otherwise you do the same thing. And this is a trap that I'd fallen slightly into. And we go to like zero, for example. You buy it, you're expecting it to have a big run, and you're not really looking at taking profit or anything crazy at this stage. And then what do? You round trip it all, and you're just wasting a bit of time. Yeah. Capital that you could have used to take yourself on a nice holiday. And it just comes back to that point. You could have had a nice holiday, earned a bit more money, and then bought it at the same price again a few weeks later. Yeah. So just chill. Like the market will tell you what's good when it's good, when the time is right. And then you just left curve it, retardio, buy the shit. And it happened in the last, like, I mean, I hate memes with a fucking passion. I hate memes. I think they're terrible. But the coin I made the most off of, I mean, it was that trade. It's still there on my chart. Yeah, because I did that with leverage and got a really nice entry with quite a lot of size, and I did very, very well off of that one move. And this was 54 cents to $1.80. Okay, so we'll go to a chart that has that much history. 54 cents to $1.80. This was by no means at the beginning of a move. This was partway through it. So I just waited and I was like, hey, this thing's bullish. Wait for a day where there's a dip, get in, go. And look, I mean, I probably rode that like a lot higher than this, to be honest, because that was a really old chart with a really old screenshot. So I think I was still holding this stuff when it was up at like $4.20 or something. I can't remember. But that's the kind of thing. You just like, just wait for the market to tell you what's good. I think in general, like, if you're buying stuff at the levels they're at now, you're probably fine. I mean, I'm very confident that you're fine. But is it worth it for like a few extra percent when you can just buy it when you know that it's fine rather than when you think that it's fine? So that's I think that's something that's changed for me recently. Like I was quite like willing to buy dips and willing to do stuff, but I think the time when you really position is when you're in like the depths of a bear market, and I don't think that's the case. I think like right now we are at a bit of a 50-50. Could go either way. Okay, the bad news that's coming out could play out, and you just don't want to be too overexposed in that regard. But yeah, it's all speculation. I don't know. I do not know what's going to happen. I just think it's like not the time to be trading with a lot of size right now. Just wait for the day that it pumps and then go in. What are some of the vaporware narratives you expect? I don't know. I don't care. Again, I'll wait to see what the market shows me. Like all of this like AI, I mean AI is going to bubble. I think if we're looking at the stock market, there's how many AI companies that you can actually buy stocks for right now? Not many, but it's the biggest thing in the world. So the bubble is going to be the AI bubble, and we're going to see hundreds of thousands of companies launching that are AI. Crypto kind of front ran that, I guess, because a lot of the AI companies are crypto based now. But yeah, AI is obviously going to be one of them still, because it hasn't yet peaked. I don't think. Gaming will always be a narrative. real world assets will be something that at some point they'll fly, but just sell them when they fly, because real world assets just to me is just bullshit. It's never going to catch on. And we've seen this over every single cycle. You go back to real world asset tokens from 2017, 2018, they never survived. Go back to the last cycle, there were real world assets then, never survived. Go to this cycle, probably not going to survive. All right, it's nonsense. Yeah, in general, just make sure you sell everything, because nothing will survive, or very few things will survive. So just make sure you get the hell out. So whenever you see these narratives, if you're taking part in them, great. If you took part in the meme narrative, great. Get the fuck out of there. Just make sure you get out of there and don't overstay your welcome on anything ever. We already see concerns with AI though early on, utility privacy, etc. These are stronger than the blockchain hype in its early days, for example. Yeah. I still think there's a potential for it to bubble, because it's such a it's such a game-changing thing. Like AI is just, I mean, it is literally everything, and it will continue to be. Like blockchain tech, 2017, when there was the first hype about that, there was a little bit of adoption. There were people talking about it. NFTs, maybe the last cycle, but I think AI is the thing that's actually like legitimately changing the way that people live their lives, much more so than crypto is. So there's money to be made there, and at the moment it's just being made by the big guys. Today's AI is overhyped, but it's opened the door for investment in real AI development that's yet to be seen. Exactly. Exactly. So that's why I think we do still bubble. Because I think, like, AI right now they're just language thingies, right? They just read shit and respond. It's not like they're not intelligent. But the intelligence will come. But for that, it needs investment. And how do you get investment? You pump the prices up, get retail to buy all your shit, and then put the money into development. Anything else, like any alts that we want to look at? I don't think now's I really don't know if now is the time to be looking at altcoins. Still, I mean, I said this yesterday. I was like, I think alts could see a good day tomorrow, but we've had that good day already. It's already happened. I said this yesterday. I was like, altcoins look good, crypto looks good, and we've already pumped. So, yay. Oh, Tau. That's another one that I have some spot. Yeah. Tau looks good. I don't know what else to say. Tau looks all right. Anything else that looks good? Anything look good? Anything look good? It's Metis. I don't know. 4 hour. Let's take a look at the 4 hour. A lot of stuff's already seen these little moves up. I don't know. I want Doge to do something, man. Dot could be a good short here. Relatively straightforward short. But this is the thing. You don't particularly want to be shorting when there's just a TWAPy thing going on. Because what do you see previously? Okay, steady. steady, steady, steady move into support. What happens? Smashes straight through it, impulse. Yeah? TWAPI down, bang. What are we seeing here? TWAPI up, probably, bang. Right? Fat green dildos are very, very probable when you see price action like this, because this is where it can start to squeeze people. And when it starts to squeeze people, you have the potential for a fat green dildo to come out of it at the end. Like a fat red dildo that happened down here, potential for a fat green one to happen here. And in which case, when that happens, you're going to run all the way back up to where the move started, which is all the way back here. So just be aware. Like, we are approaching the time where fat ass green candles can start to pop out from nowhere. And the thing is, very hard to get positioned into this in a long right now, because you ain't low, you're at resistance. But if resistance breaks, probably doesn't look back for a long time. Okay? And there's just a void above us. It's just void of any kind of like volume and liquidity above. So yeah, you just got to either get in when there's a significant dip, or try and find a trade locally that you can go into, or attempt the shorts, because of course it can break down. If it breaks down, you're going to come down here. So you got better risk to reward on the short positions. But when you have the better risk to reward on the short positions, that increases the potential that you're going to trap those shorts and leave them behind for good. So DOT actually looks like it could go big old badass green candle soon. And it's the same with a lot of this stuff. Like EGLD, similar. It's just, and how, like, I think every stream that I've said is like, this is what we will see. Yeah? What we will see before we get the next big breakout is you have the range that gets put in. Yeah? And then what you get is a lack of participants in the market, but prices just do this and do this and do this. And you can't really trade it. Yeah? You can't really trade it, but they do this up until the point where you have this range and they just gradually go up. No one notices what's going on. And then one day, bang, they go. Yeah? And that's what we have been looking at and what we have been expecting. I've said it on like every stream that I've been talking about. This is the start potentially of that move, because there's not people trading it. Remember it. And I do rant about it often. People aren't trading this. It's simply an exchange that's just moving price into a point where they can cause a reaction and they can create an extreme. So prices are just being moved there. So DOT was a nice example of that. EGLD is a nice example of that. Now, what happens here is, are retail going to take the bait and start to short this, in which case then we can see an impulse? Or are they going to start to go long, in which case then it can drop? But all of this, literally, I'd say, yeah, 90% of the volume that we're seeing here is just very simply market makers moving it to that point in the chart. Because it's not really organic. It's not like, yeah. And the examples of this are just everywhere right now. So we just have to wait and see what the outcome from all of this is. But we are starting to see some fat green dildos occurring already. Yeah. So you see the TWAPI and then you go boom. And there are some examples that are starting to play out of this. Yeah, TIA looks decent. TIA is one of the longs that I'm in, so I am holding this long on TIA. I did add to it last night. So I can show you guys. TIA is one that I alerted. It's like the only altcoin trade. So I have a few of these spot plays. Oh, Tau is the other one. TIA and Tau. But if I just open up here and I can show you. Open up here, I can show you TIA. Futures tier. What does it show my execution? But yeah, basically, where's my thingy majiggy? I can't find it. This guy. But yeah, I've been adding a little bit to this. So I was buying it down here, and then I added a little bit last night. So it's moved my average up slightly. But yeah, tier is one of the trades that I am in. Lunacy. Yeah, again, similar kind of thing, right? Impulse up, corrected a lot of that move, and just TWAPy. Would be kind of crazy if Lunacy comes back to life. It's not something I particularly want to trade, but we'll see. We'll see. This is the other thing, like, so Tron, and they're not even, like, literally. I mean, it's Justin Sun, and he has not even been hiding the fact that he's just been market making this himself, him and HTX, yeah, and they're just like, yo, if you sell overnight, we're just going to pump it some more, and they're literally just trading the EMAs, and they just have bots. That's what I mean by TWAP. It's just it like just consistent market buying, and then just release, and then just go again and release, and go again and then release, and they just keep on building the speed of it. But like, he's been tweeting about it. He's just like, EMAs. that's all they're doing. They're just, okay, cool, we'll release it, let it drop into the EMAs, TWAP it again, release it, drop into the EMAs, TWAP again, release, drop into the EMAs, TWAP again. And it's just been a consistent thing recently. So yeah, we wait for volatility when we get something a little bit more organic that's playing out. Okay. Anything else to discuss? I don't think so. I think we'll probably wrap it up there. Done enough of a stream for today. Thanks for coming out here and sharing stuff. You're welcome. Yeah, it's just, as I say, it's just an opinion. I don't really know too much about what's going on here. There's not a whole lot to be doing. But I think, yeah, we can be, I don't know. I don't know. Cautious optimism, but I still don't think anything exciting is going to happen for another month. But we'll see. We'll see how it goes. So yeah, thank you everybody. I'll see you all again in the next stream, the next video. Have a great weekend. Bank holiday weekend for everybody in the UK, and maybe a few other places as well. I don't know. But yeah, bank holiday Monday coming up. I'll still probably be around on Monday, but it is a bank holiday. So see you guys then. Have a great day. Have a great weekend. Until next